Hey, everybody. Thanks for joining us again on another episode of the Alex Hayes podcast. I am your host, Alex Hayes. Joining me today is a very special guest of mine. He's a local friend here in Northern Arizona in the Prescott area. It is Joe Cusack. He is the owner of Northern Arizona Business Brokers,
Correct.
and he has just got a long career of success. And I brought him on here to share his wisdom with you today about all things business brokering and his career and how he got here and what lies ahead in the future for business owners. So with that said, Joe, thanks so much for joining us today.
Thanks, Alex. It's a pleasure to be here. I sure appreciate it.
I got a good question for you to open, though. Who were you in high school?
Who was I in high school?
Yeah, I want to go back a little bit here. Who were you in high school?
I was the kid that got picked on all the time. I was on the chess team and the debate team, and I was over 6 feet before I was over 100 pounds.
Oh, wow.
So I was easy pickings all the way around.
Man.
But it was fun. I really enjoyed a lot. I actually had some success there, and it was great.
I could see you're a very jovial guy. You're very, very personable, carry conversation very easily. I could see that you have a lot of that going for you. So this is super easy, super
Well, I
fun.
appreciate that. No, it's fun to be here. So thank you.
And so your transition, graduated from where?
So I have an undergraduate degree at Gonzaga University, where I got a degree in English and economics. And then since I didn't know what else to do, I went back and got my MBA from Thunderbird, the International School of the Graduate Program, which was later bought by ASU, is now ASU's International Graduate Program. So 2 undergraduate degrees and an MBA. So I remember when I interviewed with IBM, the guy that was interviewing me sat me down and he said, I can usually fix most college kids. He goes, I think you're beyond hope. That's how it started.
Well, it's clear that's not where it ended.
Well, no, I talked my way into that.
So after you got all these degrees, you go into the public workspace. Where did you end?
So I started my career and really thought I wanted to be an attorney. Worked for a little bit. Every attorney I worked with hated their jobs. And so I thought, okay, well, if you all hate yours, maybe I don't want to do that. But I didn't know what else to do. And this was a long time ago. So this was 1985, 86, somewhere in there. The personal computer had just come out. I didn't know what I wanted to do, but I had all this, education. So I talked my way into getting hired as the accounting solutions specialist for 5 Computerland stores in Southern California. The Apple Macintosh had just been released. The IBM PC AT had just been released, which was the size of your car. And so people didn't know what to do with them. So I partnered with IBM and we did seminars to small businesses around how to use these PCs to run their businesses. One of the things I learned was we divvied up the leads at the end of these presentations, and IBM took everybody with money and left all the rest of them for me. And so I was like, after about 6 months of that, I'm like, well, this kind of sucks. So I went and got hired by IBM and became a sales guy for IBM.
Awesome. And what were some of those early things that you had to pick up because you had a long career in sales, right?
Correct. They're all, a long time.
So talk to us about some of those early lessons in sales in particular, and how do they serve you today?
Well, I was really fortunate, and you and I have talked about this, right? So I was hired by IBM back when IBM was the gold standard of business salespeople. Nobody got fired for buying IBM. And so with that came a lot of responsibility on the part of IBM to never do their customers wrong. I remember that one of my customers had an old joke. He said, you can buy better, but you can't pay more. And well, I took that to heart, but really what that meant was when IBM said they were going to do something, they did it. And so I learned very early on that the customer and the customer's success was at the center of everything IBM did. Now, one could argue IBM lost its way for a while and it's back, and but it's not like it was back in the 60s, 70s, 80s, and maybe, it kind of lost its way in the 90s, where if you just did what was right for the customer, everything else took care of itself. And they could do that because they could deliver on any promise that we were allowed to make, and they charged enough money that they could absolutely do whatever it took to keep a customer happy. So that was a foundational experience for me. And I left that job after a while and I joined a little startup called Microsoft. Everybody thought I was crazy. And so I did that for a while, and that was great. And I really enjoyed it. It was much different, but they didn't have that same mindset of do what's right for the customer. Matter of fact, I remember going to my boss one time. I ran the largest account team or the largest account, the team of the largest accounts in the state of Arizona for Microsoft. And I came to him one day. I said, my customers hate me. They hate you. They hate me. They hate Microsoft. They feel like they're captured. They don't like the product. And his answer was, go home and check the stock price. And but at that and the stock was up and everybody was making a bunch of money. It was great. But at that point, I realized I was not in the place I wanted.
Mm.
And so one of the customers, the CIO for Motorola, he and I were at dinner one night lamenting over the fact that my customer hated my company. And he said, hey, you should go work for Cisco Systems. We love those guys. They're the up and comers. And when we ask them to do something, if they say they're going to do it, boy, they do it. So I went and interviewed and got hired as a regional manager for Cisco Systems and spent 20 years there. Much the same. Cisco became the new IBM. Just do what's right and everything else is fine. And so that's kind of the way I try to run my business.
I love it. I love it. And so when you moved over to Cisco, talk to us about what that career looked like for you over 20 years. I mean, were you building teams? Like how did you build this whole thing that you in your career for over 20 years?
Well, part of it was staying there, right? I used to kid with my kids. Cisco was a very cutthroat, still is, I think, not as much as it used to be, a very cutthroat business. And the general theory here, the sales teams went like this. Everybody got their quotas on August 1st because their fiscal year was August 1st through July 31st. Everyone got their quotas on August 1st. The lowest performing member of almost every sales team at the end of January was fired. And somebody was hired to backfill them. And they ran for 6 more months. And the lowest performing member on that sales team was fired, and they did it again. And they did that relentlessly for years. And the reason was because, Amazon would call those bar raisers, right? It's a bar raise. So everybody had to raise the bar, constantly raise the bar, raise the bar, raise the bar. You could be succeeding. And if you were the worst guy on your team, you got cut. I used to call it getting voted off the island. And so part of working for Cisco was just not being that guy.
Wow.
And a couple of times I danced to the bottom of it, right? Because, things are how they are and business is how it is. You're not always successful. Always managed to make my way through. So did that for a long time. And then at Cisco, really, there's 2 paths. You can go up into management or you can run larger and larger accounts with bigger and bigger teams. And I chose the larger account, bigger team route. I thought that was a more fun job. It was a lot more gratifying. So, the global account managers for some of the very largest accounts were some of the most sought after jobs. I got to do that job for a very long time, kept those jobs. Then I ran teams of those people for a while near the end, and it was fantastic. We had our group within Cisco was the 27 largest accounts within Cisco globally. And they basically, you had carte blanche to walk into the CEO or anybody below and say, your customer needs this if you want this. And Cisco would try to find a way to make it happen. And it was back to my IBM days where just figure out what that customer needs, figure out how you can solve it, and then get your company to do that. And it was great. A long career. Go ahead.
No, it's okay.
Yeah, so that was it. So did
Okay.
that for 20 years. It was fantastic. Really enjoyed it. Glad I don't do that anymore.
I have another follow-up question to
Sure.
that. If you had to boil down your 20-year sales leadership career into just no more than 3 first principles, what would it be?
Oh, that's a really good question. Well, we talked about one already, right? Which is do what's right. Do good business. And so you rarely ever got in trouble if your business was correct. And you rarely got out of trouble if your business wasn't good. No lying, no cheating, no stealing, no gaming the system, no pretending that your customer said something when they really didn't. None of that, right? Do good business is kind of the first principle. The second one, maybe I'd say is, especially within teams, right? And I know you had this in your career as well, right? Is don't do something or don't ask somebody to do something you're not willing to do yourself or have already done. And that I think was super important, right? When you're in a corporate sales environment, just like a lot of things, right? You have to ask people to do things they don't like to do. I have lots of stories about those if you want, but your the credibility to do that yourself, to own the same process that you ask somebody else to own. There's lots of cliches, and one of them, right, is you can delegate responsibility, but you can't delegate accountability, right? So own accountability, even if you're putting through somebody through their paces, they're uncomfortable, you might have to fire them, stay accountable with that. And maybe the last one, I try to remember this now is don't confuse activity with productivity.
Oh, yeah.
Right. It's easy to just do things. I had my first boss at IBM sat me down and he said, look, here's your quota, the number $10 million, all of the sales days in a year. Let's take out Friday afternoons, and let's take out vacations, let's take out holidays, let's take out all of the other stuff that IBM's going to ask you to do that have nothing to do with your quota. And we are left with something like 73 days, working days. He goes, you have to get $10 million in 73 days. So you have to figure out how to do that. And we know you're asking you to do too much. You figure it out.
Oh, wow.
And I thought that was a really good lesson to learn as a kid because I didn't.
That's cool. No, I think that's so that's so true because there's so many entrepreneurs out there just so busy being busy and they're not really moving the needle or being productive. So I think that
Well, it's
last one
just
really is.
it's kind of just human nature, right?
Yeah.
And like I'm that way too, right? You sit down, the next thing you know, you've played with email for an hour and you didn't get anything done. So everybody's got tricks as to how to do it, but if you can't figure out how to be productive, you're not going to make it.
So what would you say was your key or your secret sauce to your leadership of your teams as you were building and scaling these big teams for Cisco? Like, what was your secret sauce there about how to lead those sales department in particular?
Well, I don't know. There's a lot of those things. So certainly being fair to everybody is super important, right? Taking a bullet for your team. I learned this from a really good friend of mine, Jim, who was one of my VPs a long time ago. And he was like, my job is to protect you from the 90% of crap that the company thinks you should be doing that I don't think you should. So I'll take that sling and arrow so you don't have to. And so protecting your team was a lot of it. And the other one too, you have to be really good at something that adds value to the team. And so you ask the team to do a lot. And so what I was really good at was working with key customers, working with the executive teams, explaining why things were the way they were, and overcoming some tough objections because the salesperson can get, a customer or a prospect all the way to the very end, and getting them to the last little bit is really hard and they need help. And so we used to get our executive teams involved. The CEO would come out and make calls when they had to. But being able to help them with that so they didn't have to do that by themselves was super important.
Getting them prepared and systematizing it so that they can get the customer to the
Well,
close.
or just go having the right executive interactions
Mm.
at the right time. Might have a salesperson work for a year on a deal, and it was a multi-million-dollar deal, and it stuck someplace at a boardroom level, and it's hard for ask somebody who's had to build all the bridges below it in an organization to also have the credibility high in an organization, and so have the ability to go in and unstick something or fix something at the end. Super important. And the teams that didn't have that really struggled. So I was good at that.
That's awesome. No, so you were there to enable them and make sure they had the resources and the support they needed
Correct.
to get everything completed.
And then when that fish had to get in the boat, right? Let's get that fish in the boat, right?
Awesome. And
So,
where did you learn that skill of like because sales is a skill and it's learned, right? That you can definitely learn it. But where do you think was the place or where did you pick up this ability to put that fish in it?
well, see, I would almost push back a little bit, which is I think that while sales activities are a learned activity, and I think that just like engineers, I think good salespeople are almost born, not made,
Mm,
right? An innate ability to be a chameleon, right? If the customer's OCD, you're OCD. If the customer is very laid back, you're very laid back. If the customer's in a hurry, you're in a hurry. Customer's not in a hurry, you figure out how to work with that person. All that stuff is kind of innate, right? People either have it or they don't.
mm,
As a matter of fact, one of the things we talked about, I think you and I talked about this last week, was engineers versus salespeople,
yeah.
and the ability for an engineer to also have those skills. Those people run companies. They're quite rare, I think. Engineers like a very predictable model, just in general. It's not fair sometimes the individual. Engineers like a very predictable path forward. They don't like to skip steps, which is why they're good engineers. They like the path the way the path is, and they stay on their path. And salespeople, by nature, are like, how do I go around the path and get what I need? Right?
Yeah.
Who can I talk to skip steps?
Yeah.
And that's important, right? So that's what I always wanted my salespeople. We had this thing when we draw on the board. There's like 15 steps between prospect and close. And the trick was with the new guys is, are you supposed to hit every step? And they all thought, oh yes, absolutely. The answer is no. You're supposed to jump steps. You
Mm.
have to do it successfully, but your job is to get over here as succinctly and as quickly and as efficiently as you possibly can. And skipping steps is skipping steps. So
I
Whereas
like that.
engineers hate that. And they're not supposed to skip steps because bad things happen.
Yeah, absolutely.
And they're supposed to stay in their path and make sure that when they say something, it's correct. Salespeople are all over the map.
But
A
yeah,
lot of these startup AI companies, that's who these people are, right? Palmer Luckey, right, is really big around Palantir right now, right? He's got a billionaire. He's very technical, but he's also very sales oriented. Those
yeah,
guys are rare. And girls, right? The women do it too, right?
yeah,
Those people are rare.
absolutely.
I'm not one of them. Don't let me touch any piece of equipment.
Absolutely. No, I appreciate that insight because I think that kind of segues into now talking about your brokerage career, right? Northern Arizona business brokers.
Mhm.
So you transitioned from a very long and successful career as a corporate sales leader, and then what happens? What's that transition process look like for you?
Well, it's funny because it's the same transition process we see businesses go through when they want to sell their business or they want to eject and do something else, which is, in my case, right? You retire from a corporate career like that. There's usually a package and you get your, your cheesy watch and a pat on the head and everybody takes you out to dinner and then it's over.
Yeah.
And it's like, now what? And I remember talking to my wife one time. I'm going from doing all of that. I'm like, what am I supposed to do? Watch TV? And she's like, "Meh." So, you have to find something else. So, played a lot of golf, which was great. Really enjoyed that. Played with my kids, traveled around, did my thing. Not as fulfilling as I thought it might be. I didn't know. And so, for me at least, I tried to have a three stools of philanthropy, right? Business philanthropy, corporate philanthropy, civic philanthropy, and personal philanthropy. And then I tried to do those things. And so in the middle of that, what I found was the angel group in Phoenix for Arizona called Arizona Technology Investors,
Mm,
ATI. And they are a group that nurtures startup companies and they look to invest. They sift through it. There's a lot of diligence that goes with them. They sit through that and they make early stage investments in companies. So I did that for 3 or 4 years and it was a lot of fun. Uh, but things run its course, and what I found was that's an interesting marketplace. The very interesting marketplace was the people that already have businesses that are looking to transition. And so, the demographics, and we all know what they are. The demographics are, this giant wealth transfer that we know is coming in this country and we're in the middle of, right? It's not grandma leaving the grandkids her 401k, although that happens too. It's the wealth in a business unlocked for the next generation. And so there's a bunch of ways that those work. There's big companies, there's medium sized companies, there's smaller companies. The ones I like are the ones where it's people oriented. And so it's working with people around how can you unlock your value? Are you ready to unlock your value? What value is that? And how do we go find you a buyer for your business, help you through that transition? You can go do your thing, whatever that next thing is, unlock the value for the next people. And so you really get to help two sides. You get to help somebody who wants to sell their business and you help somebody who wants to buy a business. And I find it very rewarding. So that's how I got there.
absolutely. So you have an angel investment stint where you're helping startups raise capital and money and take businesses to another level, and then that kind of leads you into a well, it's going to help.
Correct.
And I like how to me the best businesses are always born out of a desire to help people. If the business doesn't inherently make somebody's life better, then what are you doing?
Right.
Yeah,
The word is value, right? There has to be value.
yeah,
Right.
absolutely. As your how many years have you been a business broker now?
I'm in my third year.
Third full year.
Yep.
And what are some of the typical deals that you see from, range of industry sizes? Like where have you seen kind of deals really, really happening?
So that's a really good question because it took me a while to figure this out. So, what I learned when I got into this is there's a stratification of deals, if you will. And so you can call those Main Street, you can call lower Main Street, lower middle market, upper middle market, and then enterprise. And so that's kind of the stratification, at least how I would put it. And so, um, and they are usually stratified by revenue size of company. And while that's not always a really good way to stratify things, it works pretty well.
Mm,
And so, if you have a business that's under like 1 million in top line revenue, you're a small business, right? You're a lower middle market kind of business, and you have certain characteristics around that. You get up between 1 million in revenue and maybe I don't know, 2.5, 3 million in revenue. Those companies all kind of look the same. Now, It's not fair because a pure services company looks a lot different than a manufacturing company, but they're all kind of the same. They have groups of people that are employed there. The founder is usually very heavily involved. The financials are fairly straightforward. There's not a lot of stuff going on in those financials, and that could go all the way maybe to 5 million in sales. And above 5 million or so in sales, again, it's a kind of an exaggeration. You start to see founders not intimately involved in the business much anymore. They're running bigger teams. There's usually a more of a breadth of value that's being offered. There's usually people coming up through that organization that may or may not want to own the company or buy the company. There's key people in there, and so there's more process in place. And so the founder sometimes has been just doing it for so long they don't care. Not they don't care. They don't have to be involved. Some of them have consciously done that so that they don't have to be involved because they know that at some point in time it's got to scale beyond them. And so that's maybe, I don't know, 4 million to 8 or 10 million, somewhere in there. And then at that point in time, you're kind of middle marketish sized business, 8 to 12 to 15 million. Now you're starting to get a real corporate mindset around the whole thing, right? I have different ways I add value. I have different teams that add value. I might have different geographies I work. Me as an owner founder, I'm typically not doing anything operational at all. I'm just running the company. I'm typically running around making sure all the finances in place, the key customers are happy. I've got growth ideas in mind. So you get to that level, and then you get above that, and you're really starting to get into groups that have a lot of that have a lot going for them. Typically, they're very corporate mindset. They've started a company with an end in mind. They're looking at some sort of equity transfer. They're looking to make 10, 20, 30, 40 million dollars. A lot of them don't want to quit. They start another company. The founders under 15 million want to keep the money usually, not always. The ones above that, they've started this company. They know where their money's at. They want to use it to roll into the next one. They're very aggressive and they're moving along. So I work in the ones that are 8 million in top line revenue, 10 million and under, where it's more of a person that's running it and a person that needs to exit.
Awesome. Thank you for so much clarity there. Because I think that's another really, I think a lot of people wrestle with that. Like, okay, like what stage of business
Right.
am I in? Like, there's a lot of that information that people just don't have. So being able to kind of see where you're at, maybe give yourself a generality or like, all right, this is where my stage of business is at. But the next logical question is, how do you value it? Right.
Yeah, well, that's great. Yeah, how do you value it? So, and that's an art thing, not a science thing, right? And so, and I just had a conversation with some folks early this morning. They're lovely people, really enjoyed it, and they're at A level and they want to get it to the next level. And so we talked about what's your value statement now? What does it need to look like to get to the next level? And what are the kind? Not that what do you have to do? One of the reasons I'm a business broker instead of a seed capital investor is I'm a deal guy. I want to do deals. I don't, my brain doesn't work around consulting and charging by the pound. And I don't like that. My brain doesn't like that. I get bored and I don't do a good job. So I'm more around, let's, let's figure out where you are. If I'll help you, I'll let you know what a picture looks like for the next one. But if you have to go do that, or I'll help you find somebody to do that like yourself. I'm not that guy. But it was, in this particular case, it was the valuation was very straightforward around how much money is really in the company. And so that's the thing I think around valuations that's important for people is if you're somebody who owns a business, just move around the table and sit in the buyer's seat for a minute and go, if I were to buy this business, what would I be getting? How much would it be worth? And if a founder or an owner goes through that honestly in their head, 99% of the time they'll come up with the right answer. So in the smaller size, it's the how much money that is really falling down to the new owners, available for the new owners, is how you value that business. Now there are changes in that, right? It's different. So a company that's not making a ton of money, bottom line, but it's got a really good top line revenue, if somebody thinks they can come in and change that model, they'll pay more for that. Somebody thinks that it's a cash cow and I don't have to do anything and I can make a lot of money, they'll pay more for that. Somebody that looks at a business and thinks it's kind of running the way it should right now, and is making, let's say it's dropping at, 200 grand or 300 grand or 400 grand to the bottom line, within reason, that's about what they're worth.
Mhm.
So, because that's okay. The more money the company drops to the bottom line, the less risk there is for a buyer to borrow money to buy it. And so that's the other thing people think about, right? If it's only making 100 grand, well, the buyer's got to make money for themselves or herself, whoever, right? And if they're going to borrow money to buy it, there's got to be a loan payment.
Yeah.
So how much money is there really?
Yeah.
If there's a half a million dropping to the bottom line, the buyer might still make the same 100 grand, 150 grand, but there's money left to grow. There's money left to pay for the loan service, maybe buy the building. And so the multiples go up as there's more money just because there's less inherent risk in buying it in the first place.
I like it. And for clarity's sake, can you define for us what bottom line is?
Sure.
Top line.
Sure. So top line is just the gross revenue of the business. Um, and the bottom line for me is different than the bottom line for the IRS. Not that there's any tax avoidance going on, because there's not. But bottom line on your books or your tax return is what's left over that you need to pay tax on after you've accounted for every single legitimate expense in that business, including depreciation on equipment. And there's a whole bunch of rules, and you need an accountant to follow them. And a good accountant will make sure that you capture as much of those expenses as is possibly legitimate. And what's left is what you pay tax on. That's different than how much cash a company spins out. So for instance, I just did this morning, right? So you take the top line revenue less what's called cost of goods, right? Which is really the expenses it takes to deliver whatever it is you're doing. And then you take out all the other legitimate expenses, advertising, accounting, uniforms, all the debt service, right? All of those other things. Debt service actually is not in there, sorry. But all those other things that are legitimate to the business. And what's left usually is the amount of cash somebody could expect. And then out of that, people pay themselves. They fund their 401ks. They might drive a car. They might pay for their own cell phones. There's other money in there, right? That you can legitimately take as a business expense. It still adds to the bottom line for your valuation.
Awesome. Again, appreciate it for the audience here. Educational. So let's talk about what are some of the things that kill deals?
Well, there's an old saying, right? Time kills all deals.
Mm,
And so really the first thing that happens is a lack of sense of urgency around getting to yes on either side. And so that happens a lot. And so that we learned this from our sales training, right? At IBM taught it, all the rest of those, which is time kills deals. You don't have a deal until the check has cleared.
yeah.
Mr. Salesperson. So if you think you're counting on that deal and it's not closed yet, let me disabuse you of that notion. And so there's a lot of that, right? Which is the deal has to close. And then the longer it takes, the less chance it's going to be. Now, deals take, business sales take between 4 and 12 months on average for a relatively small business to sell. So the second thing really is people aren't ready. Either the business isn't ready or the buyer's not ready. And so that kills a lot of deals. My job as a broker is to make sure that the business is ready. Their financials are in order, they match, all the paperwork's complete, the description of the business is complete. And when anybody says, well, let me, what happened on this, this particular event, or this happened, tell me about this. If you have to hem and haw and get back to them in a week, any legitimate buyer is going to think, you guys aren't ready, and they're going to leave. And the same is true for buyers, right? If I ask buyers, where are you getting your money, or how do you want to do this, or what about that, or give me a proof of funds. If they can't do that, they're not a legitimate buyer. And so that kills a lot of deals. And then maybe the third one, and I know this might hit closer to home, is mentally the owner's not ready. It's the fun part of this job, but an owner has to be mentally ready to do this because it's hard. I find myself being a relationship manager, a marriage counselor, all of these things I had no idea that I was supposed to do, because change is hard for people. And if you owned your company for 20 years or 10 years or 30 years, and you've been the person, right? You're the queen. You've been doing it all. And now you're not going to be the queen anymore. And you're going to give it to somebody else, and you're just like every other schlub. Um, that bothers people. And that realization happens at some time in the sales process. I call it the dive under the desk moment. Everybody at some point in time cracks and thinks, what have I signed myself up for? And there's a lot of science and a lot of art around remembering why you did this in the first place. Doing with that with a guy right now who wants to sell a business. When I first talked to him, he says, I don't want to do this anymore. Okay, fine. What do you want? So he told me the terms he wants. We've been lucky to find two buyers that basically are giving him that exact set of terms he wants. And all of a sudden the deal starts changing, right?
Mm.
And it's because he's not really ready. He thinks he's ready. Now we'll get there. He's a good guy. He's doing it for the right reasons. We'll get there. But what the behavior is when you start seeing the deal change at the last minute from the seller side, they're just not ready. And so we got to work through that. And that's where a lot of consulting, a lot of hand holding goes around. Are you really ready? Do you know what you're going to do later? Do you have your kind of house in order? I just saw a Wall Street Journal article yesterday, and it was about CEOs and CEO transitions. And it's the same thing. So Ken Chenault, the CEO of American Express for a very long time, whom I knew, American Express was one of our long held accounts I ran with, was an extremely professional person, very accomplished. And he's had the same thing, which is if you don't plan for your transition, you will be bad at it. And the planning is not who's behind you. The planning is what's in front of you.
Mm.
And that was just in the Wall Street Journal yesterday. So
Love it. I love it. You're going to have to share that article with
sure,
me, 'cause
I'll send it over.
that's super, super relevant. So what are some of the practical steps for people that are considering selling their business at various sizes? What are some of the practical steps to take to start getting the business ready and themselves ready?
Well, I think one of the biggest things is know the value of your business now. That was the conversation I had with some folks this morning. They're like, we want to sell. We don't think we want to sell today, but we want to start thinking about it, which means they're head and shoulders above most everybody I talk to. So how much am I worth now? So when that number comes up, and nobody ever likes that number. Never once as a owner said, "Oh, that's great." And so, okay, that's how much this is worth. Okay, fine. What's your number, right? What do you think you need? And that's a different number. Great. So what are the steps to get there? And so I think the first really thing to be prepared is just where are you now? Financial advisors do the same thing, right? Different skill set, different things that are being worked on, but financial advisors do the same thing. Where do you want to be when you're retired? How much do you have now? That's a big gap. How do we fill the gap? And if we can't fill that gap, how do we lower expectations? That's what a good financial advisor does. The money part's not the hard part. The hard part is making sure that conversation is identified. So business owners have to have it too. And so the time to find out what your business is worth is not when you just can't take it anymore. We do that a lot.
Yeah.
And so that's really the best way to get ready. Now we can talk if there's other mechanical things people can do if you like, but that's really the best thing.
Yeah, what would be the first three action steps? Somebody's finally getting to that point where, like, yeah, what am I going to do? I think I'm done. I think I'm ready to sell this business. But what would you say would be the first three action steps? If you say the first one is valuing, make sure you get a good like
Make sure you know where you are today.
know where you are today. What would be the second step?
Well, put yourself in the buyer's position.
Buyer's position.
So if you as an owner are doing everything for this business, can you really leave and have the business not fall apart? Or do we have to find somebody whose skill set looks just like yours, but not worn out? And that happens, right? At the smaller level of businesses, right? At a higher level of business, it's very important for the founder owners not be material to the business and have people underneath and have processes. And there's a lot of consulting that goes on around. Can you leave and your business not fall apart? In the smaller ones, that's not always true. You just have to find somebody who wants to do that job. And we see it a lot in machine shops, contracting companies, construction companies, where somebody's like, I'll run a roofing company. I'll do what you do. I'm not worn out. I'm young. I'm ready to go. Right. And so it's okay. But, can you put yourself in the buyer's shoes about what's really in your business and could you really hand it over to them and have them be successful? I think that's a good, just kind of general step to go through, right? And if you do that, most people are honest, genuine people. And if they put themselves in the buyer's shoes, they'll come to good, solid conclusions about what's fair for everybody.
So value the business, know where you're at, put yourself in the buyer position. What would be the third step beyond that?
You got to have help to do this. You just have to. Larger brokerage firms have an ecosystem of people within the firm. They'll have analysts and they'll have financial people and they'll have attorneys and all these people on staff. And that's the ecosystem that they bring. Smaller ones like myself have an ecosystem that don't work for me, but it's the same set of ecosystem. So you as a business owner who wants to transition, have to have good, sound financial and accounting advice around taxes, around what to do with the money you're going to get, around is your business accurately reflected in the numbers? Sometimes it's inaccurate to their detriment. Sometimes it's inaccurate to the buyer's detriment. So are we fair with our numbers? You have to have good legal counsel. You don't need a lot of legal counsel, but you need a lawyer in your court that can review your contracts and make sure that your interests are represented correctly, right? When you sign contracts, I can negotiate your deal, but I'm not an attorney. Don't pretend I'm an attorney. Somebody needs to look at that with an eye towards how do we stay out of court, right? How do we do what's fair but make sure that our contract is what we need it to be. Sometimes they need business coaches, right? Around how do I transition something? How do I prepare for my next step? What am I going to do next? Although typically at this size, they don't need that as much. They need that at up front usually, but not at the time. So those kinds of disciplines, you need an ecosystem with you.
That's super helpful. So value the business, put yourself in the buyer position, look at everything from 10,000-foot view, and then assemble your team or your board of advisors going to help you get through that process.
And look, I think brokers add a lot of value. Not everybody does, and not every broker adds a lot of value. But here's one of the things I try to help owners understand. The last thing you need when you're selling your business is to have the thing start wobbling at the end, because every buyer's looking for a reason to pay less. And it's fair to do so. Nobody's trying to take advantage of anybody, but everybody's looking to go, aha, that's not quite worth what I thought it was. My price just went
Mm.
right? And so the ability to keep the business running as strong as possible, run through the tape is super important. And so offloading this over to somebody like myself that can manage that process, get your company ready. You still are involved, but do the legwork, do the work, find you the right buyer, find multiple buyers, get these deals set up correctly, manage your ecosystem, get this thing done and through while you're running your business. I see more people lose money by trying to do it themselves. And it's not that they're not good at it. Maybe they are, maybe they aren't. But they can't do everything. And so they take their foot off the gas of the business. Next thing you know, you have a dip in a quarter. You just lost money because the buyer's not going to pay for it. They're just not.
So that leads to another good question is, you know, how do you evaluate if you're in the market trying to sell your business? How do you look at a broker and be like, yes, this is the broker that's going to represent me?
Boy,
Like, I mean, because there's so many, like, there's a few people out there that are offering broker services, but what are ways that people can evaluate apples to apples a good broker? What should they be looking for?
I wish I knew that. It's the mystery, right?
Yeah,
Just like how do you find a good financial advisor? How do you find a good CPA? Someone recommends someone to you and they look okay to you,
yeah.
right? They're hard to tell apart. How do you know a good financial advisor when you see one? The answer is you don't. And so, or a good accountant or a good lawyer. The answer is you really don't. And so you can go on references. That's fair. Most of the time, people go on personality match. I just referred somebody to a financial advisor this morning, and there's a bunch of people that can do the same job. I was looking for somebody that had a personality match. So when these people talked to this person, everybody was on the same page and everybody felt like they could work. I think that's how brokers work too. Until you get higher than I run. And so if you're in the 20 to 50 to $100 million brokerage range, you can evaluate brokers on the people they know, the deals they've done. There's usually a very strong track record. They're very industry specific. So if you're in the machining space and you're running a $30 million, aerospace machine shop, there are brokers that just specialize on that, and that's very important to get done. At my level, not so much. It's just, can you work with this person? Can you trust them? And that's one of the things I tell potential sellers is we're going to sit in your office some night and it's not going to be going well. You're not going to like the answer. You're not going to like the process. You're not going to like the questions that are coming in. Whatever it is, right? There's that moment where it just sucks. And you got to have somebody that's willing to sit with you through whoever you pick. I'm willing to do it, but not for everybody. There are some sellers I don't think I can work with. And I'm sure I'm not people's cup of tea, right? They look at me and like, that person doesn't resonate with me. That's okay. They got to trust somebody.
Yeah. Okay. I think that's super honest and super fair because You know, like how you won't know until you're on the inside. Like that's what I tell a lot of my clients. Like it's you have to be on the inside to experience what it is that we're offering, to be able to understand it.
Right.
You know, so I can appreciate that for sure. How does the outlook look right now? So you said lower to middle markets is where your range is right now. What are you seeing in the local community right now in business transactions? What's transacting right now?
So look, I live in Prescott. I love my local community. I called it Northern Arizona Business Brokers for a reason, which is I think that the businesses outside Maricopa County really need this level of service. I'm happy to do that. I like it. We do business all over the state of Arizona. We do business in the state of New Mexico. I've got a deal going right now in Kentucky, of all places, because there was a reference to that, and that's fine. Inside Maricopa County is a little different than outside Maricopa County. So, and the businesses I see inside Maricopa County are typically larger, in the 2 to 4 or $5 million range. Um, but there's some commonality. So the commonality here is we had a large period of uncertainty around elections. Regardless of what side you're on, you didn't know what was going to happen next. And so there was a period of uncertainty that has somewhat subsided, but there's also additional uncertainty. There's always uncertainty.
Yeah.
So tariffs have introduced a level of uncertainty, whether you like them or you don't like them. The playing field is uneven. It's uncertain. And so uncertainty makes usually for people that want to not do things, and that's a capitalism thing, right? If you can just get some certainty, things do fine. So there's still uncertainty as to what's really going to happen. In the manufacturing sector, the current market climate is more favorable to manufacturing than it used to. The accelerated depreciation of equipment, the ability to hire different people, all those things are changing. And so I see manufacturing businesses thinking, you know what? I've lived through a tough period. I think I might keep my business for a while and run it a little bit and see if I can get my numbers up. Other companies, very distribution oriented, that might be hit more with tariffs, are like, you know what, this might be as good as it gets. So I think maybe I'll sell now. And so we see a lot of those folks saying the market's high, the stock market's high, there's lots of buyers, buyers are feeling pretty good about themselves. Now is a good time. That's kind of what I see. Mechanically, interest rates are high. Um, SBA is running up somewhere between 8 and 12% for a loan. That's a lot. It's a lot for a business to take on. And so those are high. By the same token, there's lots of buyers out there that are willing to assume that for the right price. And so we have no shortage of buyers. There are more buyers than sellers in this market. And if this was real estate and there's more buyers than sellers in houses, right? Housing prices go up. If there's more sellers than buyers, housing prices go down. Well, right now prices are up and staying up because there's way more buyers. And that's kind of the other kind of interesting dynamic. Um, Inflation's coming down, but it's not done yet. The stock market's high, so people are worried about that. And so if you're an investor with, I don't know, pick a number, 10, 15 million bucks, and you need to do something with your money, what are you going to do with it? Well, you could put it in cash. That's no risk, but you're not making any money doing that. You could put it in the stock market, but everybody's pretty sure that you're not going to, maybe it runs for the next 10 years, but maybe, maybe not. So you'll put some of that in there, but got to hedge that. You could buy commercial real estate, which is what a lot of these investors used to do. So you could take your 3 million bucks, you could plunk it down, and you can make a 7%, 8% return. There's not a lot of work, but there's some work. So that's what a lot of people would do: buy an office building or two, or buy hangars or whatever, or you can buy a business. And businesses can return 20, 30% on your money, maybe more if you structure your debt correctly. And so there's a lot of money out there chasing businesses because they think it's the best return. Time will tell. Some of these businesses will do really well. Some of them won't do really well. Some of them get run into the ground and others get run up. There's a lot of private money, a lot of private equity money chasing deals right now. And that's something important for maybe the small business community to know. So when you see a private equity person buy a $20 million concrete car, the other day I was talking to $25 million roofing company. That's a big roofing company. So do I have to be a $25 million roofing company to sell my business? The answer is no, because the way this works is that's called a strategic buy.
Yeah.
So the strategic one is I bought one big roofing company. Now I have a big roofing company. I know what I'm doing. Me as an investor, I want lots of little roofing companies, and I can add to that one, and I can add just add fuel, add fuel, add fuel. And so 2 million, 3 million, $1 million roofing companies are very interesting to the private equity person. That is the big one. Concrete's another one. There's a couple of people in the Southwest that have decided that they want concrete companies. They have a couple big ones. They're willing to buy smaller ones because they're adding it to their portfolio. What they're going to do is add them all up together and sell them as a package to somebody else, and they'll make money that way. So there's a lot of room for small businesses in that scenario if you can find the right buyer. It's
Interesting.
a long answer to a short question. Sorry.
But no, I love it though. Is that called a roll up? Is that what a roll up is?
No. Well, yeah, it can be called a roll up. Yeah, it can be. Roll ups can mean a couple different things, but the answer is yes. Um, is what they're trying to do.
So what would another strategic buy? So what's another version of a roll up then?
Well, another version of a roll up is I might roll up debt. That's the other way you use that term. So I've got debt in this company, and I'm going to roll that up to debt in another company. So that's another term that you can use for roll up, another concept for under roll up. But the one you are using is correct, right? Which is how can I accumulate more,
Yeah.
right, and pull them together?
Okay. And so where are the places that where are you seeing as a common deals? Is there any kind of common deal structure or some sort of commonality between the different deal sizes that you're seeing that maybe people can start using as a yardstick? Or is it really all just dependent on it's one on it?
No, there's a lot of commonality, right? Just almost every buyer is going to assume debt if that business's sale price is over $1 million. Even a private equity group that has $20 million in the bank doesn't want to put it all on a couple of deals. They'll use debt. I just saw a chart the other day that said the main private equity funds in this country are running over 60% initial debt. Now, they are very sophisticated in how they think about their debt, and they're trying really hard to work through it. But if they've got, so the way private equity works in a kind of an easy nutshell, right, is I've got an idea, I've got some money, I go get a bunch of other investors and they put money in a fund, right? And I say, I'm going to get you a return and we're going to do it in 5 years. So I get 10 million, 15 million, 50 million, whatever it is. A lot of family money out there. It's 5 million, 10 million. So, a lot of farms, right, that sold off a chunk. Grandpa had the ranch. Dad had the ranch, right? Kids don't really want to be a rancher anymore, but there might be, a couple thousand acres there. So they sell off the land. They got a bunch of money. What are we going to do? Well, we'll start a fund and we'll go invest in businesses. They don't put all their capital in one place, so they're all running debts. Anybody over about $1 million in sale price as a seller, has to deal with the buyer having debt. Not always, but almost always. So that's a commonality about it. The other commonality is the bigger the deal, the more they want the seller to stay around and carry some of that debt. Um, and so, and I think those are bad deals for smaller deals. For bigger ones, you kind of got to do it. If you're going to sell your company to private equity, you might loan that fund 10% of that 20 million bucks, and you might carry 20% for 3 years to hit some targets.
Now, when you say carry, what do you mean by carry?
That means if you got $20 million for your company, every 10% is $2 million, right? So 20% means I didn't get $4 million. I have to earn that $4 million. So really, I got 16. I didn't get 20. And I'm there for 3 years. And there's a set of financial targets around for me to get my $4 million. I have to do certain things. So the company has to do certain things. And sometimes those work out great and sometimes they don't. So, but on the smaller deals, anybody who wants somebody that's selling a business for $1, $2, $3 million to carry, I think it's a bad idea. Sell your company, even take a little bit less and get out of it.
Yeah.
Right? Because the carries just don't work at the smaller level.
I love it. I think that's great information for everybody. So, kind of a couple more questions before we wrap up the segment. But what are you seeing in your pipeline right now, and for the next 5 year runway? What does it look like Maricopa County or maybe broader industry, United States? What are we looking at as far as the transfer of businesses and how is this happening? I mean, is AI affecting this at all? Like what are you seeing as maybe positives and negatives or maybe market shifts in this business buying, selling, acquisition?
Well, that's a good question. So to me, there's a couple ways to think about this, right? One of them is we have a downturn, recession downturn, or don't we? Because in recessions, buyers dry up and valuations dry up. Now, that doesn't mean sales dry up because somebody that was clipping along doing a couple million top line as a roofer, now they're doing 800,000. They had to lay off a bunch of people. That's hard. And so they may say, you know what? I'm out, right? I'm okay with the lower valuation. I'm out. So there's still deals that happen, but the market that we've been in for a while now that I expect will continue to go is one of optimism. And so, barring pessimism, optimism, I think, is going to mean that valuations continue to rise slowly, maybe a little bit more if the debt loads can come down or the debt service numbers can come down, and the buyers are still willing to buy good businesses. So, there's one. The other thing I think is that there's been a big generational shift, right? COVID was bad in a lot of ways for a lot of people. But one of the things that it did to the marketplace was there's a whole group of, I'll call them kids because I'm not one of them, but people in the 25 to 40-year-old range that went through a pretty significant rocky period working for companies, and they've decided they don't want to work for the man anymore, and they would rather have more of their future in their own hands as opposed to somebody else's hands. And that's a pretty big shift, right? I think that's the biggest shift the US has seen in a long time.
Mm.
And there's a lot of people that are like, I don't want to be a banker anymore. I don't want to get sent home. I don't want to be told to wear a mask. I don't want to have to do all these things. Maybe I agree with it. But I didn't like it. Maybe I didn't agree with it at all. Whatever it is, I want to control my own destiny. And those people are out there and they want to buy businesses and they're going to buy businesses. And so I think for the next 5 years, barring barring a big downturn, those people are going to be aggressively buying businesses. So if you're a seller and you don't want to do it anymore, there are people that will buy your business and run it well. Now, the last one is you asked about AI, right? So AI's got a lot of hype. I think it's an amazing thing, but it's just a continuation of the automation of back-end processes and intellectual processes. And so there were people that refused to adopt, the internet. When I was working, there were people that still had fax machines, and by golly, you had to fax that over. None of this email stuff, right? And so change operates slowly. So a lot of processes were very, very slow to change, right? When the spreadsheet was invented, I was in the industry when the spreadsheet was invented. People just picked up what they were doing on paper and did it on the spreadsheet. It took a long time before they did it a different way.
Mm.
And so AI is kind of accelerating that, but it's the same thing. There are people that want to do things in a different way and people that want to do the same thing with AI.
Yeah.
Both of those are okay answers. But I can tell you that buyers are really noticing if there's a business owner who says, I don't want to adopt AI anymore. But that's too much for me because they think they've then got a competitive advantage. They'll pay more for your business because they think they can do something different. Just like if you said, I don't want to be on the internet. I'm good. Send me faxes, right? Some internet savvy person is going to come along and go, I can fix that. So I think that's the same thing. And I talk to a lot of business owners, and a lot of the older ones are like, I don't want to do AI. It scares me. I don't want to do it. That's fine. Sell to somebody who does, you'll get top dollar.
And so talk to us really quickly too about these online business buying, selling platforms. What's your general feeling or opinion of them? Are they a good opportunity for people looking to sell or buy businesses? And talk to us about those.
Sure. So look, the role of a broker, and I'll answer it this way. The role of a broker really is to get you ready to be sold, find buyers, go through the diligence negotiation process, and get you to end of job. There's kind of four things that go with that. Right? The find buyers thing is where these marketplaces come in. And so I leverage those marketplaces all the time. And when you get out of my real realm and you get up into real private equity, those marketplaces they don't add a lot of value because your broker should be able to go to a pool of people that they know buy businesses like yours. At this level down here, there are the people that want to buy those businesses are on the same marketplace that you would market towards. So BizBuySell and BizBen and Axial and LoopNet, and there's all of these marketplaces of businesses that are out there. What's different so how do you leverage them correctly, right? There's a statistic that says that 93% of businesses on BizBuySell, which is the big one, never sell. Well, it's not because BizBuySell is bad, and it's not because the buyers are bad. It's because that business is not represented correctly. 99% of the time, they want way too much for it. Just like the FUSBO, right? The for sale by owner on the real estate, those hardly work. They sometimes work, but those hardly work because owners have an inflated opinion of how much their house is worth. And so people don't buy it. And so getting it correct, getting the pricing correct, getting the marketing correct, is those marketplaces are still a very good place to find buyers. But you have to be smart about how you use them, and you have to be ready to have real conversations with real buyers when they come up. Most of the deals I sell go through one of those marketplaces to find buyers.
And so when you're evaluating buyers, I know you've said this a few times to me, but I'd like you to kind of maybe share it with the audience. You have a quadrant of the different types of buyers for when you're trying to match your with your seller. Can you explain that a little bit?
Well, sure. At the level at which I operate, more people I think are trying to buy a job or are trying to buy a business they understand. If maybe it's part of a portfolio, but it's still something they understand they're going to be deeply involved in. So you can't do that if you're running $100 million fund out of Connecticut.
Hmm.
And so I look at it as a quadrant of, do you have your own money or don't you, as a Mr. Buyer or Mrs. Buyer? And do you live in Arizona or don't? And so people that live in the locality in which these businesses are sold, that are coming mostly with their own money, which means they want to run the business themselves, to my mind, are the best buyers for the businesses I represent. Now, there's difference, right? We've got a machine shop, an aerospace machine shop we're working with. That buyer could be anywhere, and that's okay. But they're $7-8 million worth of business. That buyer could be anywhere, and that's okay. But the concrete guy or the roofing guy or the lady that runs a art gallery or the services business. Those people are best bought by people who live in that community. So that's how I look at it. And so if you're from Connecticut and you're going to parachute in and give me a lowball offer and that money's not even yours, you're just running with a fund, that's okay. I'm not going to disqualify you, but we're going to be really careful about how you roll. If we're working with somebody, I've got one deal I'm doing right now where we're working with two people, both of them are local. I know where their money's coming from. I know why they want to buy this business. One of them I've done business with before. Those are people we can work with, right? And I think we can come to a fair conclusion on both sides and get the seller what they want. It's a better way to run a deal.
Love it. I love it. And yeah, no, I think this has been a super interesting segment. And you mentioned that you are an optimist. What is the one thing that you are the most optimistic about in your industry right now?
Um, that most people want to do the right thing. I heard two thought experiments, and they'll tell which one I like. One of them was, if you gave everybody in the world a button on their phone that if they pushed it, the world would end, how long would the world last? And the answer is about a nanosecond. Somebody would push that button. So that's the pessimistic view of that, which is there's bad people out there and you have to be really careful. The other one, I heard Penn and Teller say this one time. Penn and Teller, the comedy guys, they said, hey, run this thought experiment. Run into a Starbucks or a coffee shop or whatever and say, my wife's having a baby. My car's outside. Can you please hold my keys until I get back? So 99% of the time, that car will still be there because people will want to do the right thing. And I thought I was comforted by that. So I I will occasionally disqualify people that I think are not good people to work with. But by and large, I think most everybody out there are good people trying to do the right thing. Money sometimes can change that calculus a little bit, so you have to be careful. But for the most part, I'm optimistic that people are out to do the right thing for the right reasons. Everybody wants to be treated fairly. And if you just do that, everybody will be happy.
Love it. And last thing, what is one piece of advice or words of wisdom that you want to impart to the audience that are struggling with this concept of how do I sell my business? What's your message to them right now?
Well, we used to tell this to our salespeople, right? Don't die alone. If things are going fine, you can do it by yourself. If things aren't going so fine, or if it gets hard, you better get help. And so that's the same kind of thing I'd say for people that own their own business, right? And I've mentioned this group I talked to this morning. They're like, we're not ready to sell our business, but we're ready to think about how to do it, and they want to start talking to people. They're going to talk to me. They're going to talk to financial advisors. They're changing accounts. They're going to do these things well before they try to sell. So my message would be, let's not be afraid of that conversation. It's me, somebody else, you, your financial advisor, your CPA, the guy you golf with, the lady that you sit next to at church. Find ways to get people to help you. Almost everybody wants to. And if you find the right people, you ask the right questions, people will help you, and then you don't die alone, right? Then you can get it done.
I love it. And how can people find you?
Well, so you'll post a link to my website. My
Absolutely.
website's out there. I'm Joe Cusack. I run Northern Arizona Business Brokers. We do business all over the state. I would love to work with anybody that just wants to understand how the process works. Are they ready? I talk to people and like, I'm ready. Let's go sell the business. Happy to do that too. Happy to explain how the process works. I do a lot of explaining. How does this work? And sometimes people like it, some they don't. So call me anytime, send me an email, call the girls, however it works, just let me know and I'd be happy to help.
Awesome. So just like you said, we're going to have a link to his socials, his website, how you can reach out to Joe Cusack, the owner of Northern Arizona Business Brokers. If you are considering this transition and you need some outside help or you want some counsel, start getting some information. Joe's a great guy to reach out to and start getting that information. So we will leave a link to all that in the description below. Please check them out. So with that, I said, Joe, thanks so much.
Thanks,
It's
Alex.
been
This was a lot of fun. Really
absolutely.
appreciate it. It's a pleasure knowing you.